Ladies and gentlemen, welcome to the Wednesday show with Steve. We don't have a name yet, but forewarning for anyone that watches my show, usually it's PG. I just want to give a quick language warning. This is the great and powerful Stephen Fiorillo, and he, I think, is going to have some choice words for the Bears today. That said, this is what Steve wanted to add on. So, Steve, please tell us this message that you have for everyone.
So please take a moment to read this disclaimer, pause the video. Tannor and I are not registered investment professionals, nor are we investment advisors. Take everything we say with a grain of salt. These are our opinions, and this should be for research and educational purposes only.
We're not your financial advisor. I still might have my certs, but that said, NVIDIA.
Well, I put out a lengthy post the other day that pissed a lot of people off and gained a little bit of traction, called "The Bears Are Wrong." And I think we can both agree that they fucked around and they found out, and Jensen saved the holiday season. And Jensen said, "Cool story, check this out."
Yeah.
And when you put up 57 billion in revenue and you beat estimates, I mean, they guided for 54. Now let's keep in mind, this is a company that now has a run rate of over 200 billion annualized revenue, and they just put up 62% year-over-year growth. That sure as hell doesn't seem like an AI bubble to me when they say chips are sold out.
Yeah. $57 billion in revenue. How many companies are doing 57 billion? You probably know the number.
Yeah, so and it's not just tech companies. Costco and Walmart are.
Yeah.
Amazon is. Alphabet, Microsoft, Apple. That's it, I think.
How many are doing it with a 56% net income margin?
0.
Well, one.
Because we know that you meant to say other than NVIDIA.
Other than NVIDIA.
Yes.
This is insane. How many are doing $57 billion in revenue with, what was the growth rate? I'm looking annually here.
62% year over year.
62.5%.
Yeah, and 22% quarter over quarter.
That's fun. And strong, improved guidance.
I mean, the guidance was pretty crazy.
The guidance was nuts.
Pretty crazy. And they're not stopping.
No, man. No, I don't know. There's two camps. This is all a bubble, circular financing. NVIDIA has to pay for their own chips. And then there's the second case here where they continue to print insane free cash flow. They have equity deals in new companies that continue to appreciate and find new customers. And
how many times, and I get it, I'm nobody. Like, I'm legitimately a nobody. Okay. I was only ranked 16th in the world at one point. Right. So, maybe I know something about something. I don't know. But when you actually follow the numbers and you think about it like this, I sure as hell do not know more than Zuckerberg, Nadella, Jassy, and Sundar. Okay. And here's where I have a big intellectual problem with what's going on, because if this was just one person going rogue, they would look like they're going crazy. This is not that. This is every top CEO that has built a multi-trillion-dollar corporation doing this. Now, Apple has stayed on the sidelines, so I really shouldn't say every. But Apple also does not have a cloud-facing entity for business. It's only for private consumers, for pictures and that type of stuff, video. You have Alphabet, Amazon, and Microsoft, all with a tremendous amount of backlog, $755 billion of backlog on cloud services. They can't get chips or compute quick enough to meet the backlog. Zuckerberg is in the same boat for other reasons. It is not one going rogue. It's all of them continuously telling us where they're going, what they need to do. And then you have other companies doing the same thing. Oracle, OpenAI, you got the reports out of Anthropic. So the idea that we're in some type of bubble when none of this is being fueled by venture debt. These are the biggest companies in the world with the biggest balance sheets and the biggest cash flow. And if you actually look at how the cash flow has grown, these companies are growing their cash flow by more than 50% over the past 4 years, when Apple has only grown their cash flow by 7%. And that's for a reason. So the idea that this is an AI bubble, it needs to end. And hopefully Jensen just put the nail in the coffin.
Yeah, no, that makes a lot of sense, actually. I never really thought to look at it just in terms of just sheer growth. Like, if the Capex is still leading to better and better growth, which is something that Jensen tried to highlight as well. He was talking in the call about other names like Meta, saying, hey, look how AI has improved, the conversion rate on their ads. That's going to lead to much happier merchants, much happier customers. Like, that's due to their investment in chips. Like, they need proprietary ad models to end up improving over time. And the more chips they buy, just like what we've seen with all artificial intelligence products, the more chips you buy, the more improvements are made, the more money you make. And so that's sort of Jensen's big thing. The more you buy, the more you make. But they believe him. And unlike some of these idiots online that have said this is one quarter or whatever, they've been doing this for multiple years now of multi tens and tens of $1 billion investments from these large companies, and they keep coming back. They're not doing that without return. Do you want to show something here?
When you're done.
I'm done.
Okay. So I just want everybody to see these numbers. These are not NVIDIA, but this is the companies that matter for NVIDIA. Okay. Apple has grown its revenue by 13.76% over the past 4 years. They have not been spending on Capex, and I can show you the Capex thing. They have not been spending on Capex. There's a direct correlation to the big four, Microsoft, Alphabet, Meta, and Amazon, investing in themselves and growing out AI services and cloud services. Microsoft and Meta have both grown their revenue by over 60% over the past 4 years, where Alphabet and Amazon have grown their revenue by over 45%. Now, here's the most critical thing. In the 2021 fiscal year, Apple generated $104 billion in cash from operations. They were the only company doing $104 billion. Over the last 4 years, they've increased their cash from operations by 7%. Look at what Microsoft has done. They've increased their cash from operations by 65%.
Yeah.
Over 4 years. And you ready for this? In the trailing 12, Microsoft's cash from operations, 52% margin. Apple's is 27%. So the idea that we're in an AI
what does it look like on the free cash flow, like after all of the Capex spending?
So I'm not looking at free cash flow at the moment. I can pull it up. I have it built out. I'm looking at cash from ops because we know that these companies, these four, are piling a lot more back into Capex to continue the build out. They're all positive free cash flow. But my point is, Apple is not growing their cash from operations. And this is the litmus test, because we see what happens when Capex explodes. We're seeing the fruits from the labor with the cash from operations exploding. And eventually, they're going to go into maintenance mode and you're going to see the free cash flow explode. My point is that you now have a situation where not just one company in 2021 exceeded 100 billion. All of these companies are exceeding 100 billion, and Alphabet and Microsoft are generating so much more cash from operations than Apple now. It's actually sad for Apple shareholders like me that they didn't take this seriously, but it's even more important because the dot-com bubble, which everybody wants to sound smart and say, oh, it's a bubble, look at dot-com. Dot-com was fueled by venture debt. Companies were raising money, putting .com in their name because they were saying eyeballs, we're going to be able to get this on revenue, we're going to be able to get this on advertising, this is what we're going to charge. Didn't materialize. This is not fueled by debt. This is fueled by profitability from companies that have a very long track record. And when you look at the quarters and then you look what Jensen just did, there is no bubble.
No, I honestly really don't think there is a bubble. I think people are calling out, it is scary to watch a new industry come in this quickly and this fast. But this is what's happened every time there's been a new technological advancement. Like the internet came in fast, mobile came in faster, cloud came in even faster than that. AI is skyrocketing or just blasting onto the scene. And I think that shocks people just how big this investment truly is. But I honestly think a lot of these tech leaders really do believe this is almost, I don't want to be too crass with this, but like the last boss, like artificial intelligence leads to everything else. Mm-hmm. This is the ultimate productivity unlock. And so they're all putting their chips on the table because they realize, hey, you know what? This could eventually replace, and not necessarily replace, but this could equal, 1 million workers simultaneously, 1 billion workers simultaneously if we get this right. So, the investment is not only for the future, but it's also yielding results right now as we continue to see, improvements across the board from Microsoft, Google, Meta that, see improvements on the amount of code that they can put out, fraud that they can detect, all of these things that are, being beneficial today. And no one, to be honest, is looking elsewhere from NVIDIA. Jensen was slamming the table on saying, hey, even with the custom silicon that you guys are seeing today, there's a reason why we're winning over customers like Anthropic. Anthropic needed use cases outside of just AWS's Trainium. Like, there's a bunch of people that are trying TPUs and they're trying Trainium and they're trying all these other things. And at the end of the day, they come back to NVIDIA. No one's leaving NVIDIA and they're finding new customers.
They're also using the Trainium chips and Alphabet's TPUs to manage workloads on their cloud servers. That's not for AGI. That's not for superintelligence. That's for managing workloads and doing other things. You're going to need both. NVIDIA is not slowing down. Even if the ramp in TPUs increases, NVIDIA is not slowing down. And we saw that when you guide 65 billion on revenue.
Time in a bubble is better than timing the bubble. I love that comment. That's very funny.
Well, keep in mind, if you think about a bubble, in order for a bubble to form, air has to go into it. And there's no law about how big a bubble expands before it pops. I mean, sure, if you want to look at it like that, we could have 10 or 20 years in a bubble before it pops. We're not in a bubble.
Yeah. No, I mean...
Show me how NVIDIA is going to default. Show me how Microsoft's going to default. How many companies defaulted? And think about it.
I don't think anyone's suggesting that NVIDIA defaults. I just think that maybe they're suggesting that, you know what, if NVIDIA goes back down to single-digit growth rates, then a lot of the hype would be killed. But honestly, that's kind of the way that they're being priced right now, is like they're growing at teens growth rates.
No, I actually have that up. I just want to check and see if the analysts updated the forward growth rate, and they did. So let me upgrade this. Right,
but that's only a percentage. The weighting is going to be really off for the rest of the week.
Well, 2027 earnings are now 865 instead of 809, so that makes a difference on the forward estimates.
Yeah, I'm just saying it's probably going to head higher as the week goes on.
I'm not saying it's not.
Like, I think people are looking at NVIDIA stock and going, you know what, this is great. NVIDIA is up 5%. Well, wait until the flurry of analysts. Wait until the real money actually takes a look at this during, market hours.
Yeah.
Obviously, other macro events could take away some of this, steam, but this is not hype. It's not a momentum trade. They are putting up real numbers and accelerating their guidance. That is like, if you're just looking as a fundamental value investor, that's got to be exciting to you.
Man, you're just setting me up to go for the kill, aren't you? I know what you're doing. You want me to go for the kill
we
right
think
now.
a lot alike.
And I'm thinking about it. Oh, and I am going to go for the kill tomorrow. I am taking the day off. And in my free time, I'll be writing a very long post to a very special somebody on X. So stay tuned for that one. But when you speak about value, okay?
I know who you're talking about, but we should be talking about Michael Burry. Is who we
I'll
should
tag both of them. How about that?
Well, okay, now you're...
I'll tag both of them in the same one. 2 for 1. 2 for 1 special. And we're not going to tell you who the other one is yet.
Well, if you're tagging them, they're going to know.
Well, yeah, but we don't have to announce it tonight about the other one.
Okay.
Gotta leave something to the imagination. Where's NVIDIA after hours? Because this did not update. Where that
196.
196. Wow. All right, so I need to flip them in Microsoft. But in all seriousness, and I just updated this from 809 to 865. They're trading at 22.5 times 2027 earnings. That's not a company that's trading at an excessive valuation. And oh, by the way, they're expected to do 89% EPS growth over the next 2 years.
Dude, honestly, I think this is not pointless, but these forward estimates are only going to go up tomorrow.
I get it. I'm just saying that this is not an expensive market. And there are pockets that are egregiously expensive, but they don't matter for the market because those companies aren't in the S&P 500. We need to be looking at the biggest companies that dictate where the market goes. And when you can buy Amazon at less than 25 times forward earnings out 2 years, and thank you so much for that.
Rusty with the 5 gifted.
And when you can buy Alphabet at 23 times and Microsoft at 22 times and NVIDIA at 22.5 times, yet Walmart and Costco traded 30 and 36 times forward earnings, that's not a market that's expensive. I mean, you're getting NVIDIA pretty close to the same. Oh my God, Amit, you did not have to do that. Thank you.
Amit with the 10 gifted.
My buddy.
He's got NVIDIA money now. He
got that NVIDIA money. But I mean, look, NVIDIA is trading around where Coca-Cola is trading with 6 times the forward growth. I mean, tell me that's an expensive market. Tell me that's an expensive company when they just guided for $65 billion. You know they're going to come in at 66 or 67, and you know their profit margin is going to be over 50%. Like, is that really expensive? No.
No, it's not.
It's not.
No. And honestly, I think if we listen back on the call, they said a direct shot at what was his name? Michael Burry. They talked about the depreciation issue, right?
Yep.
They specifically said that the A100s, which are a 6-year-old chip, is still being utilized fully at full capacity.
Burry shot back if you saw it on Twitter.
Did he?
Yeah, what did he say? Shot back.
What did he say? Do you remember?
I don't want to paraphrase it, but he put something out. And it was about depreciation schedule.
Okay, he's said a bunch of things recently. Okay, since earnings, he said the idea of useful life of depreciation being longer because chips from more than 3 to 4 years ago are fully booked confuses physical utilization with value creation. Just because something is being used does not mean it's profitable. GAAP refers to economic benefits.
GAAP does not refer to economic benefits. GAAP refers to net income and profitability. Just saying. Okay.
Airlines keep older planes around for overflow during Thanksgiving or Christmas, but are only marginally profitable on the planes that that are around today. A100s take 2 to 3 times more power per flop, so cost 2 to 3 times more in electricity alone than H100s. And NVIDIA claims H100s is 25 times less efficient than Blackwell for inference. If that is the direction you are going, chances are you have been doing it and it's not pleasant. No, I don't think that that's right. I think that the fact is that it's still at that cost, even though it's not as profitable, is still profitable for those companies. I think that just goes to highlight that Blackwell is just that efficient.
Look at what he put out after that and pull up the chart, the tweet. Every company listed below has suspicious revenue.
This one has suspicious revenue recognition. The actual chart with all the give and take deals would be unreadable. I mean, why is it suspicious?
I mean, look at the next sentence. The future will regard this picture of fraud, not a flywheel. He's basically saying this is all fraudulent because he can't admit that he was wrong and on the wrong side of this. Like, he's going as far as saying this is fraud.
Yeah, the majority OpenAI is not getting 13 or they said even more than $13 billion from NVIDIA. They're getting $13 billion from consumers and enterprises. You know, just because you could put over this and say this is where a lot of the investment is coming from, it's because they know that there's a ton of value in the AI space, so they're happy to invest in others in the field. The companies with all the money are giving it to the companies that don't have money to take equity in those companies. Microsoft, NVIDIA are giving equity deals to OpenAI. You could find that in any industry. This is just at a hyper scale because it's the fastest growing industry that the world's ever seen.
I mean, I'll tell you this. I think Amit is right. Amit was saying that, and I don't remember if it was privately or not. I think it was publicly, actually, that, or maybe it was somebody on Amit's channel, that Burry is addicted to the guy he used to be with getting that right, and he's trying at anything to be right on this because he lost that feeling from calling the housing market. This is not the thing to go after. I mean, I just don't see how you can say every one of these CEOs is incorrect. And it's more than that. It's looking through the earnings call of Alphabet and looking at the Gemini utilization rate. It's going through the Microsoft earnings call and looking at how much growth in cloud there is and what the backlog is. It's going through Amazon and looking how it's being used in their infrastructure. The largest companies in the world that are basically the centerpieces for cloud and AI.
Was it on the compound that you were talking about?
No, it wasn't.
Okay.
I didn't listen to the compound today. I thought it was somebody on a mid, or maybe it was a mid. Maybe it was a compound. But they are just Michael Burry is going out of control, and I don't think he's reading all these earnings reports. And I really don't think he's looking deeply into their biggest customers at their cloud expansion. Because have you seen him talk about the $755 billion of backlog between the three? I haven't. He's talking about Capex, but there's a reason they have to spend that much. Backlog is other companies contracting services with Microsoft, Alphabet, and Microsoft. So how are we going to say that they shouldn't be contracting and Microsoft shouldn't be spending? It's crazy to say that. Who are we to judge what these companies need and what they don't need, and if they find these products useful?
Yeah, I mean, I do understand what he's saying. Like a backlog is only good until it's not. I mean, like if for example there's some new breakthrough technology, and this is just me playing devil's advocate. Obviously, the high majority of what I'm betting on is artificial intelligence. But if there's some new breakthrough technology that somehow comes out that just completely wipes away the need for GPUs, watch how fast that backlog gets wiped out.
I'm not saying there isn't.
They'll pay the fee for for early termination, it wouldn't make a dent.
At the same time, if there isn't and this continues, this could continue for 4 or 5 years at this point. It doesn't seem like this is slowing down.
That is my expectation. I'm just stating that, like, you know, I sometimes people look at backlog like it's guaranteed, it's already locked in. That's just
it's not guaranteed, but in order for these companies to spend what they are spending, you have to have massive backlog. Otherwise, they wouldn't be growing this excessively with data centers. So backlog is very important, and it helps tell the story. And I'm not seeing anything that's a crack. Now, are companies like Oklo and SMR overvalued? Absolutely. Should they be anywhere near where they are? No, they shouldn't. Is Palantir overvalued? Yes, it is. But I'm sorry, just because there's a couple of companies, some of them could be in the S&P 500, most of them not. They represent such a small number of the S&P 500 that even if Palantir went back to 125 or 100, which I would still think is overvalued at that level, it wouldn't do anything to the market. It's what, 1% of the S&P or less? I mean, NVIDIA is what, 8-9%? The Mag 7 are what, 36% of the S&P, 33%? I mean, these are the companies that matter. They're trading at great valuations, and they have good growth ahead of them. They're cash machines, and when they're finally done expanding Capex and they go into maintenance mode, watch how much free cash flow explodes and watch how many buybacks they do.
Did you see that post that Amit put out of the bearish analyst that talked about NVIDIA's quarter and why he's not?
Let me see it.
Dude, this is so funny. Shout out to Amit. He put this on.
He puts so much stuff out there, I can't even follow it. Like, he's my news source. I just scroll through his freaking X twice a day just to see what I missed, because he puts everything out so quickly. Hats off to him.
Yeah, no, it's perfect.
It's amazing.
It's at Amit is investing, by the way.
Yeah, please go follow him if you're not following him already.
Yeah. Okay. Let's quickly take a look at this.
Are we allowed to play this?
You know, we'll figure it out.
I know that we're allowed to play CNBC. We're allowed to play Bloomberg or stuff.
If we lose, you know, monetization, don't worry. It is what it is. I want to show you it. Let's play.
Show it to me later.
No, we're playing it.
Right.
Jay, I ask you each and every quarter, and I'm going to ask you again, is this print enough to get you to change your rating on the company?
No. Short answer, no.
Okay.
No.
Okay. I don't even want to hear his explanation. Don't even play. It's not even worth it.
No, dude. You need to listen to
No,
it.
I don't want to get stupider. I'm stupid enough. I don't need to get stupider.
He's so worried about his monetization. We're making no money on ads. It's fine. Listen to the video.
Fine.
Why not?
I mean, it's an okay quarter. It was a good quarter, decent guide. You know, they at GTC DC 2 weeks ago, they put out that big revenue.
What is that? What is that?
I made a joke online. I was like, this guy's literally making like a GPU rack in the back.
Yeah, is he acting like he's an engineer that he like knows more than Jensen or something with that?
I don't know.
Is that strategically placed?
A little bit, probably.
I don't even know who this guy is. Who is this guy?
It says this thing here. He's a Seaport Research. I think they have $100 price target on NVIDIA right now.
Never heard of him.
And last quarter, he put that price target up right before they, right before we showed the print, and I had some choice words for him last quarter. But
can we get him? Can we talk with him? Can we get him on one night, please?
Yeah, come on, Jay Goldberg. You're invited onto the show.
Open invite.
Nice. We want to just hear your reasoning.
I want to get smarter. Open invite.
Okay, let's take a listen.
Put out that big revenue number, $500 billion over 5 quarters in revenue, which shocked everybody. I think what happened is they got more allocation from TSMC than they were expecting, so that's upside. That was more than I was expecting. But that's flowed into numbers now, right? And you start listing all the things that could go wrong with NVIDIA. That's a longer list than the things that could go right. So I still think they're challenged. I still think this is but I'll give them credit. This is a good quarter. I had actually raised my estimates last week because
I'll give them credit. This was a good quarter. Really? 57 billion with freaking, what was it, 62% year-over-year increase? Good quarter. Okay, cool.
Yeah. One of the bigger surprises on revenue and EPS that we've seen in most quarters, by the way. But yeah.
I checked for telling me they'd be doing pretty good. It's okay. I'll give them that. But one quarter, it's more than one quarter game here.
It's more than a one quarter game here.
Yeah, no. He's right. It's more than a one quarter game. Let's look at all the subsequent quarters that they've been growing revenue on a huge basis. I mean,
Steve,
you're right. It is.
We are the same person. I literally posted this. This was my post to him. I'm like, yeah, it is more than one quarter. That's why we're so excited here. Like, are we kidding?
That's an amazing post.
But I honestly think he's trying to build his own GPUs in the background. So he doesn't like them because he's trying to sell them. Hand building his own racks.
I mean, look, everybody's got an opinion. I may not be correct. Okay. In a year from now, he may be right and I may be wrong. At this moment in time, that's certainly not the case. And the Bulls are correct and the Bears are wrong at this moment in time. What happens in a year or two? We don't know. But for the moment, you have the smartest people in the tech industry. And let's widen the basket. Larry Ellison, Lisa Su, let's throw Jensen in there. Let's throw Elon in there. Let's throw whoever you want to throw in there. I don't know the CEO of Broadcom's name off the top of my head, but throw these CEOs. Every last one of them are telling us where we're going. This is an industry-wide thing. And it doesn't seem like there is anything that's going to stop that narrative. So I don't know. It's really hard to take the Bears seriously right now.
Yeah, I do think it's going to be similar to some of the Bears that had to face Tesla. But even Tesla's at such a higher multiple. Like I actually, you can have some of the value guys come out and say, hey, you know what? Tesla is trading a little bit expensive right now. Let's see if the robots get started. NVIDIA's like full on. They're in production mode. Every customer wants every product they have. They're fully sold out. And how can you possibly have Bears? It makes no sense.
I mean, think about this. Tesla's trading at 123 times 2027 earnings, and NVIDIA's trading at 22.5 times, and their forward growth is very similar. Tesla's expected to do 98%, and NVIDIA's expected to do 89% forward growth. I'm sorry, Tesla's really overvalued here. They really are. They've pulled so much growth forward. Now, I understand the story, and I understand why Tesla's getting a pass, and I'm actually not that mad at it because Optimus does have the ability to be the biggest product we've ever seen. Now, if that fails, Tesla's screwed. But I understand why Tesla's getting a pass. To say NVIDIA is overvalued, $100 price target, I mean, if I put $100 on NVIDIA's share price, they would be trading at 11.5 times forward earnings. It's a tobacco company at that point. Legitimately a tobacco company at that point.
Or wouldn't that even be lower?
Philip Morris would actually have a higher multiple than freaking NVIDIA.
Yeah.
Altria Group, maybe not, but Philip Morris would because of Zen. It's like, come on, you're saying $100 price target, 11.5 times forward earnings. Then what the hell do you think the rest of the market should be valued at?
Yeah, that is. Let me double check that he is at that price. But if I remember correctly, Seaport was there. But yeah. Okay, what else did you like from the earnings call?
Yeah, Philip Morris is trading at 17 times 2027 earnings. Altria Group is trading at 10.1 times. It's basically a tobacco company at that point. Like, that's crazy.
To be fair, Jay Goldberg has a negative 6% return this year and a 29% success rate.
Cool.
He is the 8,300th Wall Street analyst out of 10,000.
I mean, I'm a little scared to see where I am at this point, but I've definitely fallen a lot.
I don't know about all that. Do you check often? No, you're 66th.
Oh, really?
Yeah.
I'm still in the top 100?
Yep.
And I actually did not know that.
74% success rate, 17% average return. Absolute beaut. Whereas,
and I've written about over 500 things, unlike other people.
Oh yeah, and Jay only covers a few stocks.
Yeah, I mean, pretty easy to blow past me. Okay.
And he's covering the one space that he just absolutely hates. Eh?
Right.
He's real positive on Apple, though. All right. Enough with Jay Goldberg. He's probably a good guy, you know. But
listen,
he's wrong on this name.
I've been wrong. I've been wrong on a lot of things, and everybody gets things wrong. It's just this is one of those areas where every top CEO is steering us in this direction. And I think a lot of people seem to forget the one common factor is technology always advances. We have never had a point in time where technology just stays dormant and it doesn't accelerate. And when you think about where we were 10 years ago or 20 years ago, and you think about where we are now, where we're going in the next decade, that amount of growth based off of this platform where we are with AI is going to make all the previous decades of growth look so freaking compressed. It's going to be crazy. And NVIDIA is a big part of that. These other companies are a big part of that. And I do have a theory that a lot of people are just in denial about how impactful AI and robotics is going to be on the global economy and on everybody's lives, and it's freaking them out.
Yeah. No, I said a story earlier on my live stream where I pulled up to a red light and the street that had the green light that I was intersecting had no cars going through it. And I was like, AI would solve this. Like, the camera on the street would recognize that there's no cars there, no one's going through, and that they would turn it back to my street so then I could go. And I was just sitting there, like, just white knuckling my, car wheel, being like, technology would solve this problem. But no, I have to sit here and wait. And yet we're early somehow. Not only do I not have to drive, I would self-drive and get greens whenever I deserve greens.
I mean, look, it's crazy to say this, but I do think we're still early on a lot of these companies.
We're definitely early on the technology. I think the thing that people are discounting on retail, like the Super Bowls, some of the people that I've seen online like set $20 trillion price targets and stuff, if you followed any of this stuff recently.
No, I mean,
is that the token generation cost is going to fall severely. So you can't just take, what's the percentage of the market that maybe AI has penetrated and then multiply that for where we're going. The token generation is going to fall by 99.99%.
But that's with every type of technology. Think about this: a laptop in 1988 or 1992, whenever it was like $4 or $5 grand for something that had a freaking screen that was like 2 shades of a color. And it just happened to get cheaper and cheaper over time. Now, it took a while. Back in like 99 or 98, you still had computers at $3 grand or so, 3,500, and they weren't like anything crazy.
Yeah, but you got to inflation adjust a little bit. It's not just the sheer dollar.
Sure, but the point is that when new technology comes out, it's always expensive and then it always gets cheaper. I don't see Apple having a problem making a profit. They're turning over 100 billion in net income, and their computers have gotten significantly less expensive from when they first started putting them out.
Yeah, yeah. Back to NVIDIA's earnings, not related to Jay Goldberg. Were there other comments that you heard during the call that got you particularly interested?
Really, Jensen got me really excited because it confirmed everything that I've been thinking and everything that I've been leaning into with my research. You know, the CFO numbers were the CFO numbers. You get that out of the press release and reading through it. It was more Jensen's conviction and the fact that him saying that all the cloud GPU is sold out. I mean, really think about that. All cloud GPU is sold out.
For the biggest supplier of GPUs.
Yeah.
They're not a small player. They're the largest player. Like Apple saying every single iPhone and Mac and every product that we could put out are immediately sold.
And think about this.
There's massive backlog.
Every single chip they bring on that's not sold out right now gets sold out within a second because they have so many orders that they need to fulfill. There's no shortage of capital. They could, TSM, Taiwan Semi, could open up another fab just for NVIDIA, and all that demand would feed right into it, and all the supply coming out of it would get eaten up.
Well, I honestly think that's why companies like Tesla and everything have started to work more with Samsung, just because they can't get an order in with TSM because it's essentially a proxy just for NVIDIA. Obviously, they deal with many customers, but like it's hard to get your order past priority past NVIDIA.
It's really incredible. Hats off to Jensen and the team. They saved the holiday season.
Yeah, yeah. But 196, how are you playing this? Do you think that if the stock opens up, let's imagine two scenarios. One, it opens up tomorrow, goes green, or macro news comes in, sells us back to where we were at close, essentially 185. When do you start accumulating more NVIDIA shares again?
I mean, it's a little difficult because I actually did not think that they were going to expand revenue this much, and I didn't think that they were going to be this profitable this year. My end of year target was 185, and we've already hit it. We've been sustaining it, and I got to rethink about it. And I'll rethink about it right now for you. So if we put a 215 price on it, it's still less than 25 times. I don't think it's unfair to say that NVIDIA has the potential to finish the year around 215. Now, I know a lot of people want me to say a higher price, but I don't get crazy. But at the same time, with the current estimates, NVIDIA 250 is still less than the valuation of Apple. So NVIDIA 250 is 28.9 times forward earnings on 2027. So look, I wouldn't be surprised, but at the same time, I think it'll settle out around 212 to 215 for the end of the year. So that's kind of, look, if you're going to hold this for the next couple of years, I think that if you start adding now and then you just keep fresh powder and buy on dips, you'll probably do okay.
Yeah.
And that's what I'm doing.
No, I
just haven't bought, I haven't, right now, I haven't been buying the dips, but if it dipped to 175, I'd be buying a bunch.
I didn't end up, I'm not looking to get more. In fact, if it ever surpasses 50% of my portfolio, I'd actually be trimming. But I'm going to stay in the similar space. I might continuously buy Nebius and all of these customers that are also like they're buying their chips from NVIDIA and then coming and saying, hey, we're turning away customers and we are at full capacity, and like we cannot get our hands on enough GPUs. Like the supply chain here is so full all the way down the line. You know, it is really interesting, just the sheer demand for GPUs right now. It's incredible.
I'll tell you, I still think Meta is the best play right now in the Mag 7 with Amazon.
I see what you're saying, from the Mag 7. But I do think even there is a case to say that Meta over Nebius is still worth it from a risk-reward standpoint. Much easier, well-known business to understand. They're much larger. I mean, if AI turns away, you know, Nebius is going to have a very, very hard time stomaching that. Meta is just going to celebrate, essentially, knowing that they don't have to spend that much on Capex. Like, they're a beneficiary if there is a new breakthrough.
I mean, think about it. You have a company that's generating more than $100 billion in cash from operations, trading at less than 20 times forward earnings. I mean, that does not come around often.
Where do you think we open up tomorrow? How do you think the market reacts?
I don't know. I want to see where's Bitcoin at right now.
Ooh, that's a good question. Bitcoin is 92,300.
So Bitcoin's going up a little.
Yeah, NVIDIA pumped everything.
I mean, if you could get Bitcoin to start rallying and Ethereum to start rallying, I think a lot of confidence is going to come back. And now all eyes are going to be on a Fed. And I do not like what I see out of the Fed right now.
Yeah. Isn't it funny? This is literally, this candle is 420, which is when NVIDIA puts out their numbers. It's crazy that across the board, even to crypto, for which, you know, the overlap of crypto to semis is not overlapping that much these days. But yet it was just a signal for just pure risk on. Ethereum moved, Bitcoin moved, obviously Nebius, CoreWeave, all these names moved. But just a broad-based signal of, oh, wow, we're still in it.
Yeah.
You know, but over 90,000 feels a lot better than whenever I was live talking about how we were breaking below 90,000. That was, doesn't feel good, especially if you're buying things like BMNR these days.
I mean, we can go there if you want. I mean, they're reporting on Friday, right?
Yep.
Okay.
What are you thinking about that? Are you buying this dip? Obviously, it's quite the dip versus where we were in the 50s.
I mean, I was talking to somebody on the phone today who remained nameless, and what I said is, look.
I very much know that name, by the way.
Oh, they told you what I said?
Yeah. But I don't know. You still continue the way you were going.
So the way I am thinking about BMNR is I never looked at this as something that I was going to call a perfect entry point into. My reasons for acquiring shares was because I believe in the long-term thesis over the next 3 to 5 years. And this is something that I'm scaling into, and I'm still actively buying. I'm still actively buying Ethereum. And I wanted to get in once I became bullish, because I had no idea what the crypto markets were going to do. And BMNR is down. It's an ugly chart, but you had to also look at Ethereum and know we've had 4 or 5 very big drawdowns in the past 5 years. This is very volatile. It does not go up in a straight line. And I certainly did not expect it to. And I said to myself, okay, I'm going to start acquiring in the low 50s. And if it starts to go down, I'm going to keep buying because I have no idea what it's going to do. But I think there's a lot of potential for both Ethereum and BMNR in the future. And I'm still buying both. But that's just me. And I'm so diversified that BMNR going down isn't really impacting me. And I'm also not on margin. And I think I do think a lot of people were buying BMNR and crypto on margin, and they may have got margin calls and were forced to sell into weakness. And to me, nobody should be using margin. Like, margin is a very dangerous thing to use. And I don't know why a lot of people use margin. I understand the benefits, and I understand how people use it in some ways, which is actually pretty smart. I won't do what some people do. They know what I'm talking about. It's a brilliant play. I just won't do it. I think there's too many risks with margin, and too many people sign up for margin and don't actually understand the implications of it.
Yeah, yeah. No, I don't play in margin. I completely agree with you. Even with this, well, especially, I shouldn't even just say even, I should say especially with these 2x leveraged funds and everything like this. It works, and you see a lot of people posting a lot of very exciting screenshots, but it works until it doesn't. And if you're left holding those 2x leverage, Hood, SoFi, BMNR, whatever, during a downturn, boy, oh boy, that can kill years of gains if you're holding too much of it. They're literally meant for intraday trading, not for long-term buy and hold strategies.
If they don't discuss staking and the share count on earnings, I'm going to be really pissed off.
No, I well, if they don't talk about share count, I don't know if I'll be able to continuously hold. Like, it's like, how long can you go without knowing what the value of a company is? That seems pretty, at some point you got to give, I'm aware that they're trying to avoid bears, but like, you're also not telling the bulls if this is even working.
Yep.
So you need transparency. Well, transparency, is that sort of cover that shows all frauds versus all real companies. I want to see that they are, the strategy is working, they're diluting at good prices, and that they continue to stack on more and more ETH. That's enough for me.
Why can't they have a running ticker on the website?
Of share count?
Yeah, what MicroStrategy does. They show you everything.
Yeah, I heard Roy talk about this and how SBET was disclosing. I didn't understand the full picture, but SBET was disclosing their share counts, and then it allowed the short sellers to time their quote unquote attacks, I guess, the shorts, to take advantage of knowing exactly when they were diluting in their share count. So that's why I think they were not disclosing it. Something about shorts. But at some point, you got to update us like on a quarterly or monthly basis or something.
But it works two ways also. So people can short and BMNR can go down, but if BMNR starts to run, shorts are going to have to cover. It works two ways. We've seen short squeezers play out, and with BMNR, it would likely be very violent.
Samuel says live share count would decrease odds of them trading over NAV. Yeah, I mean, I could see where people are going with that, but
look, we need to see what they're doing with staking, and also they should be talking about with how much ETH that they hold, how they're becoming a network validator, and what rewards they're getting from that, because that's a differentiator from other Ethereum trusts because of the sheer capacity they have.
Mm-hmm. Even SBET began staking, only small amounts, but I'm even fine if BMNR starts staking very tiny amounts. Go stake $1 billion of your ETH. At least you're showing people that you're making some income, or that's the play, or you're going to build it out in a certain way. Not doing anything, I think, is, Yeah,
we'll see. I mean, look, they better have an earnings call, and they better discuss all this. Otherwise, why even be a public company?
BMNR is in my folder of wait and see.
It's not a bad place to be.
What?
Not a bad place to be.
No, agreed.
Like, look, it's a speculative company, and it's not a company where you have financials. So it's definitely a wait and see. Like, this is not a sure thing. And as we've seen, this can go lower.
Yeah. What else did you want to highlight in this last little bit?
I don't know. I mean, NVIDIA earnings were amazing. I think that the bears...
Best we've ever seen.
I mean, this is the best earnings report I've ever seen.
Ever, across any company.
Yeah.
Oh, well, I mean, yes. I mean, if you're talking sheerly fundamental, yes. NVIDIA is breaking so many world records right now.
Here's why. Palantir's Q3 earnings were a masterpiece. Okay. Take the revenue amount out of it. When you really dig through what Palantir did with the amount of customer growth and just everything across the board, Palantir's earnings were a masterpiece. Their earnings were one of the best I've ever seen just from what they did. Okay. Forget about they're a smaller company than other companies. This earnings report from NVIDIA blows every earnings report I've seen from Meta out the window. Maybe not out the window, but it's better than them. It's better than anything I've seen from Alphabet. I mean, you're talking about a company that's a hardware company operating at over 50% profit margins, and they just grew 63% year over year at the size of revenue they're generating. We've never seen that before.
Never.
If this isn't the best earnings report we've ever seen, I truly would like to know what is so I can read through it and I'll get back to you. But
Amit seems to think it was Palantir, but honestly, like, come on.
I gave Palantir a lot of credit. The Palantir's earnings report was a masterpiece.
They're delivering hardware products and growing at 63% to $57 billion. Palantir can't even deliver, software that fast. Like, this is insanity. What's happening here? To be honest, Palantir, I'll agree with that.
I'll agree with that. He took the words out of my mouth. I was going to say that this year, I wouldn't even say this quarter, for the first 9 months of 2025, NVIDIA, Palantir, and Robinhood's earnings reports, probably the best earnings reports of the year. Their Q3 earnings reports.
NVIDIA's rule of 40 was 127, I believe.
Why do we even care about rule of 40?
People care.
I get it.
People care. But yeah, these and props to Amit for literally identifying and going all in on those three companies.
Yeah, I mean, he called me. He's like, dude, just trust me, just buy 1,000. I would never forget the conversation. He was almost begging me to buy 1,000 shares of Robinhood because he knew I was making a mistake. And I couldn't get it past my head that the fucking app sucked at that time. And it was for kids. And it was not for investors. And I was wrong. I was 100% wrong. And that's one of the things I got wrong. Like, I don't get everything right. And I overlook things. But so does everybody. The difference is I'm willing to say I got something wrong and I overlooked it. And one of my good friends tried convincing me and I just wouldn't listen because I was looking at the product for what it was rather than for the product it was going to become.
You put too much of your own feelings in the
100%. 100% I did. But that happens. It happens to everybody.
No, yeah.
I will not stop swearing. So I will say whatever I want, whenever I want.
No, I think that's fine. But
I'm not
especially for a late night show like this, I don't think it matters. But
I'm not asking for permission.
No, I'm giving you my opinion.
I'm just saying.
As free will as you have to say those things, I have as much.
I'm going to get a little loose at 10 o'clock at night.
Yeah.
But this was an incredible quarter. Jensen absolutely saved the holiday season. We have a lot to look forward to.
With Capex of 1.6 billion, like there's such an asset light business. It's so insane.
It's incredible. They have the best engineers in the world.
It's crazy.
Think about what's going to happen in Q4 if they put up 65 plus billion.
Yeah, and no one even cares to realize it either, but gaming revenue on NVIDIA was really hot this quarter too. I mean, honestly, 30% year over year growth. They showed up some real good numbers here too. No one cares to talk about it. I'll say it. Sorry, I missed what you were saying.
No, I'm just saying if they put up 65 billion or more of revenue in Q4, that puts them on 140 billion run rate if they just stay flat.
Yeah, but they absolutely will.
But that's my point. And then think about this. You get 140 billion run rate at a 50% profit margin. That's 70 billion in net income next year. And we know that they're going to grow and they're probably going to get close to 100 billion in net income next year.
It's really funny that, he said 500 billion and then like some analysts adjusted their pricing and he's like, all right, we'll wait and see. And then I think it was Colette that said, yeah, I mean, we can increase that 500 billion. It's actually pretty likely that we increase the 500 billion. Like they're going to beat their midterm guidances. It's like, what are we talking about? We're just making up numbers at these points. These are not numbers that I can fathom. We're talking about like a skyrocketing $5 trillion business that's putting up numbers that deserves, like, I don't know. I don't want to get all in my head talking about how they should be at 250, 300 today. But honestly, whenever you
think you can make an argument for 250. That's not crazy. I think 215, 220 is more reasonable.
It's not crazy if they can continue to hold this, not even this growth, but then once you go into maintenance mode, like holding at, essentially what's it going to be, like $100 billion a quarter. That's only this year. If there's a 5-year build out, like we could be talking multi-hundreds of billions of dollars of revenue per quarter in maintenance mode.
Guys, I'm growing a mustache. See? I'm trying to be like Tannor.
There you go.
I'm growing a mustache. I don't need to glue one on. I'm growing one. I'm going to be like Tannor. But Tannor, I got a very serious question for you.
Yeah.
Like, this is so serious, and unfortunately, you have to answer.
Okay. Very, very serious.
Very serious.
Go ahead.
All right.
I might not answer it. I'm getting scared now.
No, you have to answer it. It's about NVIDIA. After what you just saw, I'm going to wait until you finish drinking that so you don't spit it out. Do you feel that NVIDIA deserves a higher valuation than Costco?
I thought you were going to say buy more, increase my, and I was going to have to tell you about how I'm not going to increase my share count. I think, and I'm going to go out on a limb, I think they deserve a higher multiple than Costco, but, and I want NVIDIA to hold a higher multiple. I think that they deserve it, but honestly, I think most of it is actually Costco's multiple has to come down a little bit.
And let's just keep in mind, Costco did $8 billion in net income in the past 12 months.
Nice. It's not going to be long until NVIDIA could buy Costco as a side project. Like, just as a warehouse to hold their GPUs.
Yeah, why not?
They'll buy them for the property to set up new data centers. I mean, like, it's getting that big.
Why not? I mean, I would love to see what Sir Joseph Carlson thinks, but he blocked me on X, so I can't.
You can't even see what he types?
No, I can't. I can't ask him.
Oh. I
can't even send a post and say, at Sir Joseph Carlson, did you like NVIDIA's quarter?
Yeah, I don't know. By the way, I'm not on the train of calling him Sir Joseph Carl. Just in case this clip gets clipped, please someone send him this clip afterwards. I'm a huge fan of Joseph Carlson's. I just don't agree about the Costco and NVIDIA thing. Obviously, Costco is a big position of his. NVIDIA is a big position of mine. We disagree, but I do still think he's a good investor.
I think he's an incredible investor. I have nothing but the utmost respect for Joseph Carlson, but he is better than me, so that's why I call him Sir Joseph Carlson.
That's a little bit of a showstopper. Do you want to end there?
No, we can keep going.
What would you like to touch on? I'll
Whatever
let you lead
whatever you would like to discuss.
Did we talk about Buffett buying Google?
We did not. We can talk about that.
What do you think that their team sees in? Because I'm sure it's not Buffett, just based on the everything.
I was actually going to ask you if you thought it was actually Buffett or not.
No, not at all. I don't think the order size is big enough. He's talked about buying Google for a long time, has turned it away for a long time. I don't think that it was him.
Yeah, I don't think it was him either. I think it was the team. I think they made a great move. And I think you're going to see more of that as Berkshire morphs.
It's coming in.
Oh, wow. Did they really just raise it to 320?
You know what's funny? That's not even the street high.
What's the street high, like 500?
350.
Okay. Interesting. So I do think that we're going to see Berkshire get more tech heavy as the years go on. And I do see a scenario where they add to Amazon, and I can see a scenario where they pick up Microsoft and maybe even pick up Meta, even though I think Meta's a long shot, but I'm a little surprised they don't own Microsoft at this point. Because when you think about Microsoft, they're actually one of the most perfect stocks from a standpoint of what they offer, because Microsoft touches almost everybody. And it's really, when I say perfect, I'm not talking about the fundamentals. I'm just talking about you have a company, and in their tentacles, you have LinkedIn, which is the #1 professional network.
Tentacles.
Yeah, they have their tentacles in everything.
All right.
So you have LinkedIn. You also have, which, think about this, forget your free LinkedIn profile. They make money from LinkedIn Premium, and it's one of the top sites businesses recruit from and post jobs on. Huge network effects. You have the whole Microsoft Windows ecosystem they generate capital from. You have the entire 365 ecosystem with Office. They generate a ton of capital from. No companies that I know that I work with, I never get anything from Google Docs or anything. Now, I'm not saying that it's not big. One of my friends uses it, who works for a very large hospital system. I don't work with him though, so he obviously doesn't send me emails, but we talk about certain things. You also have their cloud business. You have Xbox. They own Activision Blizzard. I mean, they have so many network effects that they basically own the entire ecosystem. It's pretty phenomenal what they've built.
Yeah, no, they're extremely diversified in 100+ countries. Yeah, I don't like their products, honestly.
Yeah, that's fine.
Even LinkedIn, I just find it like the worst platform. I'm aware it's doing well, but like,
there's no alternative though.
No, I agree. For
and
what
I will
it is.
say, I like Google Sheets better than Excel for charts and stuff. I think they make way better charts.
And sharing.
Well, you can share it through OneDrive, which is just fine.
Yeah, but I can share direct. Like I can share. I can make a spreadsheet shareable, and then or post it to a website, and then anyone can click it.
You can do that with
Excel
also. You can.
I don't know if they've changed it, but not whenever I was using it.
Well, I have Office 365, and you can do that. But regardless, it's the #1 OS, and for business, huge network effects. I can see Berkshire owning them, and I do think they're going to get more tech heavy, because once Buffett goes, do we really think that they're going to put as much of an emphasis on banks and other things? Energy, probably, because Adelson is a energy guy. He ran Berkshire Energy, but I can see a shift from banks to tech.
Do you think that that's a broad market thing or a Berkshire thing?
I think it'll be a Berkshire thing. I mean, do we really think JP Morgan's going to get like so much bigger than they already are?
Well,
They're already an $800 billion company.
Like talk about a business model that just works. If you have a ton of capital and you can get, a return on that, they don't even need customers at this point. Like at some point, you just almost run your own pool of capital and continue growing. So I don't know. Does JP Morgan ever need to die? Is there any way to innovate them out of business?
No.
If you hold capital, you'll like not even AI can replace you.
You're not innovating JP Morgan out of business, but I think that you are going to see cloud first banks do pretty well.
Yeah, at getting new customers and businesses and stuff like this. Yeah, I agree. Yeah,
but I just don't.
We invest in SoFi.
Yeah, I just don't see Berkshire post Buffett staying with that model. I think that they're going to move more toward tech. I mean, we've already seen it with the Amazon purchase and now with Alphabet. I mean, it's a signal of things to come.
All right, let's wrap.
Okay. I can't rap, by the way. So you'll automatically win a battle.
I got to send you a clip, by the way. This is I don't know if you care to listen to any of those like rap battle things, but sometimes the bars are pretty good, and I want to send you one.
Okay, you can send it to me.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. If you like either Steve or myself's channels and want to see more of us, I think we stream every single day. Steve, yes, no? Yes?
Yeah, around there.
Then go to the @ dividend streams, future investing, Stephen Fiorillo, these sort of things. But thanks so much for watching. Really do appreciate your time. And bye for now.
Have a good night, everyone.